it's me again. And today's video is about Sterling's video. You should go watch Sterling's video. Check his video out, link below. He went to the CES and he had an interview with CEO George Palikaris of MetaMaterials and the Chief Financial Officer of MetaMaterials, Ken Rice. There was no Greg McCabe interview. Greg McCabe was running around the convention. I'm guessing from a McCabe standpoint, he's looking for something to VC in because Greg McCabe likes technology. According to his website, he owns that augmented reality company. It's that something VR. It's an edutech company. It's like you have a science lesson, like you go out to the pond with your iPad and it shows a frog, and it has a bunch of augmented reality stuff for a science classroom application, which is really cool. So I figured that Greg McCabe went there for that because, you know, he's really big into investing in the future. And education tech can be big with contracts. So today's drink is tea. A lot of people think that I'm drunk when I do this. I'm 100% sober when I do these videos, by the way. When I'm clumsy and goofy and walking over, that's like my natural state. That's my natural homeostasis state. So today it's the black tea because I'm fat anyways and trying to lose weight. I can't be drinking all my calories. How do you lose weight? I use math. You see, I like math. Calories in versus calories out, right? I guess I'm a math person. Like, to prove stuff, I'm a math person. But everybody always told me I was wrong. So I've developed this sense where, yes, you need math. So I'm drinking black tea with a touch of honey because it makes things so much sweeter. And this is my favorite restaurant. This is the Big Texas Steak Ranch. And it's in Amarillo. And if you're Texan, you say Amarillo. If you speak Spanish, it's Amarillo, which means yellow, because yes, the soil is very yellow up there. It's named after the yellow loam formations on the panhandle. So let's get into it, and let me preface this by saying this is not financial advice, of course. This is my opinion. And by no means is this a critique of Sterling himself or his video. I'm just using what the information was in this video, and this isn't, you know, I'm not going to critique Sterling. I'm not going to critique. I think it's awesome that he went to CES and got this video. So you should support him by checking the video out below because I'm going to talk about, I took just light notes about just what it pertains to the dividend. I only have, let's see, 1, 2, 3, 4 pages of notes here. That I have taken and transcribed from his video with timestamps. So you can go back and you can play our videos and you can go to these timestamps. Okay, so in this video, Sterling talks about, he interviews Ken Rice and George Palikaris about metamaterials, of course, and they talk about the structure of metamaterials themselves. They then go on to the special dividend. Okay, special dividend. And one, they want to preface by saying that they do care. Both parties do care. They say, don't say that we don't care. Don't say. So, 28:10. Time mark 28:10. 28 minutes, 10 seconds. George says this is a group where they truly believe in the asset value. They truly believe in the asset value. You know that I truly believe in the asset value because I say in terms of asset value for us as preferred shareholders, our assets are worth $29 to $46 per share. That was my dividend calculation. I'm still convicted on it. That's our value, guys. This is our value, and the management team at Torchlight truly believes in their asset value. They're not going to sell us short, okay? Sterling then says at 28:35, that's what I mean by y'all don't care. To which George and Ken quickly go, no! And Ken says you shouldn't say that. We do care. We do care. George then says he wants the maximum value that is captured for every single shareholder. And by that, he means dividends. He wants the maximum value for every single shareholder. 29 minutes and 14 seconds. George says, we have absolute and 100% commitment to making sure that the original Torchlight shareholders get a max value of the assets. I know there's a lot of FUD right now with what does original Torchlight shareholders mean? Is MMTLP fake? Remember, guys, Borders said it was okay to buy MMTLP. Okay? George and Ken were very good at this video by not talking about MMTLP. They didn't even bring up that. That's a whole can of worms in itself. As by my MMTLP investigation. That's a whole can of worms. They were... By original Torchlight shareholders, they mean the people who held through the merger. The people who saw the $10 high and then it dropped all the way back down. They want to bring maximum value for those people. Those are the original people holding the dividend pre-merger. You can go get the dividend now via MMTLP, but the original people who held, the original Torchlight shareholders, meaning the people pre-merger who saw the rise. Now, why I think this is going to be of good value, because one, George said that we have absolute 100% commitment to making sure that the original Torchlight shareholders get the maximum value of these assets. 2, John Berta said it's been an easy hold, wait and see. I talked about that in my MMTLP investigations. Let's go on before I get into any more convictions about this. Let's go on the timeline. At 29 minutes and 44 seconds, George Palacaris says he cares deeply. He cares deeply. He wants to see, no matter if you have 1 share or 1 million shares, he wants to see everybody get their maximum value. Next page of notes. This is light note taking for me. I'm fastidious in that. We're making 100% of our best effort, pending money for the very best lawyers to get the best process. And maximum value is captured. That the best process and the maximum value of what our assets are worth are captured. We know how much our assets are worth to us. We've done the math. They know. When they use language like this, they know. 30 minutes and 15 seconds in, Ken states that they were drilling not because they're going to get into the oil business. He quells that myth, but he's saying that he's drilling, of course, to satisfy the lease compliance, which we already knew this. Why does MetaMaterials want to get oil business? Because they have a company to focus on. They can't be in oil and, if they want to fully develop and transform like this butterfly into the semiconductor nano witchcraft technology that they wish to be. Actually, it's not witchcraft technology, but it looks like it's indistinguishable from magic. As you want to cite some Arthur C. Clarke, there you go. 3119. They start talking about the management group. The group has done a remarkable job of drilling, and keeping the leases fully into compliance. It puts us in a good position to spin out or sell the assets, and then Ken states most likely to spin them out. This doesn't mean a bad thing for you guys, and we're going to talk about this in a minute. I'm going to show you what they were saying with this language given. Again, the world of oil is all hush-hush and NDAs. 31 minutes and 27 seconds in. George knows that people constantly ask him about when Divi and drilling updates. He wishes that he could give like a video feed or just a live feed on that, but he can't. Again, oil is very NDA-ish. Then they go on to say at the 32 minute and 24 second mark, this is the only thing I disagree with what they have said. This is like my big disagreement. If anyone has any questions, they can pick up the phone and call Mark Kumanowski at Investor Relations, to which I go, ha 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 ha, on my notes, because I have emailed Mark. I have called Mark. Half the time his inbox is full. And when I emailed him about other things, I just get a canned MMTLP response. I have since given up. or I put Mark on the back burner for now. Some other people are very much more successful with Mark. And then they go on to say that you can't give us Twitter questions. I do disagree with that. Like, we should ask Mark because you can't even get in touch with Mark. This is common because I've called and inquired at other companies, and I've never received a response from them. At 32 minutes and 52 seconds, Sterling asks about the management team. Kudos to you, Sterling. Ken Rice states at 33 minutes, the team that has been working. They haven't. I know he said that have been assembling or will assemble. He has been working. They're very experienced. And then he states that even Greg McCabe has been involved greatly, and he is thrilled. So Greg McCabe, the night before this interview took place, on what was it? It took place Friday, so it was Thursday. Greg McCabe was involved in the assets. So and I'm going to cite one more. Well, let's go on before I go back to Greg McCabe. 33:19, George says, I'll say that they're world class. He's talking about the management team. He says that they're world class. Ken goes on to say they're young and aggressive, or was it George? Somebody said that they're young and aggressive. Ken then states at 33:35, here's the big one that I like. If you go back, you'll probably recall the first time they announced anything about the new drilling was in September. Sterling goes, yeah. Ken, we're done. And then look at his smile right here. Okay, so here he's asking about the drilling. Let me pull this up. If you go back, you'll probably recall that they announced anything about the new drilling was in September. Sterling goes, yeah. And then, Ken, we're done. And now look at his face. So, okay, we're slightly behind. It then says we'll be in very good hands with the asset, and we're going to be very happy because Greg McCabe is happy, and he's thrilled. He also mentions that Greg McCabe hasn't sold a single share, and he's thrilled about what's been going on with the asset so far. Perfect, because we all know that everybody wants maximum value for this. It then ends with talk about the dividend, and we go into a Twitter rant, and Sterling asks Ken for his Twitter, and Ken says, I don't want that. We then learn that the SEC doesn't recognize Twitter to be an official means of communication with the company, and anytime an official tweets on Twitter, they put themselves at risk. This explains why George was talking about the dividend, special dividend, and then he backs up and saying it can be a spin-out, to which later on that day we get this official PR. That made total sense now when he said that, and then, of course, it has to be followed up with a PR. I think that PR was prematurely released. You know, it was supposed to be closer on the 28th, and that's why a lot of people were still asking about that PR, and I reminded people the 28th PR we were supposed to get was on the 3rd. It makes total sense now why it was released then. I'm hoping we get a drilling compliance thing soon. I know they can't give us an update all the time, and there's lots of NDAs and forms to fill out, and you can't go talk about oil until certain things are done. But I do hope if drilling is done according to Ken and Ken's expression here, that we do get an update soon. Now, let's go into this probable spin-out. Sale or spin-off, probable spin-off. Is this a bad thing? Is this going to be 1 to 3? Is this going to mean that it's going to go public? The answer to all that is no. Why? Because they want the very best value. If they wanted the top value for the people who held through $10 and they care, why would they let this go public to be shorted again? And in fact, when things spin out and they are public, here's an article. I've talked about this article before. Lots of people like to short both the parent and spin-off. It's an easy short target for a lot of people. A lot of people make a lot of money with that. So how do you prevent it with the spin-off? The answer is a private company. So if it is a spin-off, one of two things can happen. It can be cash and shares, private shares, or it can be private shares with the share buyback program. That's called an equity repurchase in private companies, or you can do public company. If it's a public company, it's called a share repurchase. But shares in a private company is called equity. Your equity stakes would be called an equity repurchase. What does this mean? Okay, so if it stays a private company, that's how you trap the shorts, because you can't short a private stock. Ooh. Okay, well, what does this mean for you? Who cares about the shorts at this point? How do you get your most value? Remember, we want maximum value. Ultimate value. Ultimate value. Okay, if it's a private company, it spins out into a private company. How are they going to get funds to further develop the asset? The answer to that is venture capital. Because to issue more shares would further dilute our holdings and wouldn't give us maximum value, right? So to do that, you have to do a venture capital. Like EIG. I talk about EIG in several videos. Here's EIG again. Or Santa Claus VC firm. I say Santa Claus a lot because I'm from Cleveland. And in Cleveland, Santa Claus isn't one person. He's like a Fortune 500 guy who doles out specific things to specific people. So EIG, we know that EIG has the money for this because they were bidding. They bought some of the ConocoPhillips Australia offshore oil property for $1.5 billion. EIG was also bidding on another big stake of the Saudi Arabia pipeline from the government. They already have a 48% stake in that. They're bidding on an additional 48% stake in that so that they'd have a majority stake in that pipeline. They didn't get it. They lost it to BlackRock. And BlackRock paid $15.5 billion for it, so we know EIG has a lot of money. EIG paid over $12 billion for their first stake in the pipeline. So you know that EIG has billions to spend on a huge thing like the Orogrande. So if it's a private company, how a share repurchase would work is that, they buy your shares back for you. They buy your share. You get a private company to buy the shares back. Or there might be a cash element and then they'll issue a share buyback later. So, because keep in mind, guys, that there was the other property, the Hazel, that McCabe and Masterson had options to buy for a really good deal. I've seen the contracts. I don't know if they've exercised those options to buy officially. If they haven't exercised those options to buy and the property sold, then we're going to get a good price. If they exercise those options to buy the property at the options price, that won't be too much money in that regards. Okay, getting back onto the share repurchase. So if you go VC and there's a share repurchase program, that means it's a private company, but you can exit out because they're going to issue either XYZ percent, 35% share repurchase for the first round, or we'll have a week window or whatever where you can sell, right? And we'll buy back your equity from you. This works great because then if another company wants to come in and buy some equity, they can. It works great on a VC because now they have the equity that they bought back from the shareholders to sell to somebody else. This works great from a VC standpoint because VC doesn't have to pony up now $16 billion to buy 80%, revenue or 75% revenue interest and 100% working interest. The VC capital can, use what, 10 billion, 8 billion for this first round of share repurchasing. So it works best in all terms. It also creates, a spin-out also creates that non-taxable event that Berta and McCabe wanted because they have millions and millions of shares and that's a lot of taxes. If you have a non-taxable event, you can hold your equity and choose to sell when you want to. So you don't have this huge tax bill to pay. Again, if you do every so often, you offer a share buyback that, like I said, it works best for people who want a non-taxable event. It creates that non-taxable event. People want the dividend. There you go. It also means that the stock can't be shorted by short sellers. And, it allows great financing terms in a VC standpoint. Okay, now let's go on to how this can trap the shorts. So if you have a private company, it can't be shorted. And some things will happen. It depends on the brokerage that the short sellers borrowed their shares from. If they issue a part cash amount, then yes, they're going to get margin called for that because brokerage will say, I want my money. If they issue a share buyback, a brokerage might say, I want my money. They may or may not. And it depends how many shorts there are. How many times this was borrowed and not fully closed out. If there's a share buyback, a broker might say, I want my money. If there's a share buyback, and then later on, they're like, oh, look, guys, we found oil, or they really start producing oil, those who hold might get a dividend. They might eventually get a cash dividend, to which every dividend after that, a short seller will have to pay their brokerage, which they lent them the shares. And remember, guys, there's unlimited losses for short selling. So, this really traps them because there's no way out. If this goes spin-offs and becomes a publicly traded company, well, that's an easy out for shorts. And that publicly traded company just gets shorted into oblivion as per this article. The best way I see it is if it stays a private company, shorts can't short it. There's no way out. If they didn't get MMTLP to cover, uh-oh. It depends what their brokerage wants them to do. Brokerage might just say, pay us this money, we're done. Brokerage might say, no, you're on the hook now for all these dividends in perpetuity. So we will see. Again, we know how John Berta feels about short sellers and people who make offers and give them low balls. He talked about Anson and how Anson was a company who originally agreed to buy an offer. So what they do is when a bank comes and does an offer for you, they see that you're going to issue some shares. They're like, hey, I'll give you this price. They come in and they lowball you for this huge block of shares, which they can dole out to other investors and keep that difference, right? Keep a small difference, kind of like a market maker, right? They make money on that difference. So that's what, and George said no limit. And then we know how Berta feels about that sort of things. So if you really want to make somebody hurt, you spin this off into a private company, you offer a share buyback, and maybe the bank will say, pay me back that share. I want that share. Anything that happens to this stock monetarily when it's a private company, basically the shorts are on hook for. It's unlimited loss. Unlimited losses. That's why you are warned. You have unlimited losses with this. When you go short, you have unlimited losses. You go long, your only loss is basically the value of the stock. When you go short, you have up to unlimited losses. And this is one reason why. So anything that happens to stock once it becomes private is, they'll have to pay. That could be fun. That can make a lot of people hurt. I don't know how much of a sadist you are. How much like of a cat. It reminds me of like a cat just toying with a mouse. So that's my take on it. If this was me interviewing, I would be bouncing out of my seat seeing Ken's reaction right here. Maybe it was a gusher. I don't know. Look at that face. And then hearing that Greg McCabe is thrilled, I would be tracking down McCabe. Personally, if I went there, I would be like looking for McCabe. I know what he looks like. I'll be like looking for McCabe. But this is my conviction. If that was me listening to it, I'd be like I'd be bouncing in that seat and I'd be dancing on the table. You can see Ken's excitement here about it. Once he said in September we started, but we're done. I think we're waiting for PR on that. I would be nice to get PR on that hopefully soon. But then again, guys, MMTLP gets fully detached from MMAT. The last of those pesky boogeyman options expire on January 21st, and that's next Friday. This market this week. Okay, let me do an emotions outlook. I think emotions are going to hit a peak high on Wednesday. This is like this whole interview and people thinking like, what's this original mean? What's the original Torchlight shareholders mean? Well, that just means the people who held through the merger. They were very good and saw that $10 high. Ken and George were very good to not mention MMTLP. I think that they wanted to avoid that can of worms entirely. I don't blame them. But we do know buying MMTLP does make you eligible to receive the dividend. It does make you a preferred shareholder. And we know McCabe is convicted on this, and they want maximum value for those original people who held through the merger, who saw that 10, because this is how Meta made their money to buy, nanotechnology systems who can do the millions of feet of nanoweb. This is how they got financing to get their center of excellence, was through the height of the Torchlight merger and that offer. And in my opinion, it doesn't make sense for there to be a low dividend value at this point that's not the maximum dividend value because they care, and that wouldn't get Greg McCabe thrilled. Again, we will see what happens as time goes on, but my conviction still remains very high. I'm hoping that they give a drilling update soon, but it just might be like a drilling update management team thing all in one at this point. We'll see. Okay, guys, I hope this answers some questions. Now you know what I think. I will see you soon. Goodbye.